This luxury versus budget. Who's winning, and can both win?
Well, both can win, and it's very clear that the lower levels like Dollar General, Walmart, Target, they're winning. The upper end may not be quite as good, but the upper end is still really good. So we haven't seen any cracks in the consumer so far. I know there was a report out that said something about the upper end might not be spending as well, but that's just not been true. I mean, we saw a really strong Black Friday right across the board. An unprecedented weekend. When you think about Thursday through Monday, and you think about both online and off-price, online was probably up 20%, 19.9, something like that. And in-store must have been up in the range of 4% and maybe more, despite the fact that traffic fell. So what happened? The people who came in were more likely to buy, and they spent more. So it was really a strong performance. I mean, the consumer looked fabulous over that time period.
In your experience, what does drive that kind of spending at that level? Is it the wealth effect? Is it a stock market at or near record highs? Can we expect to see for the rest of the holiday season those luxury retailers do well because the market is doing well?
Well, what we didn't get was a big drop in the stock market like we got last year. And that's a big help, of course, when the market's strong and asset values stay up. And then you just saw the guys over at OPEC, right? Everybody's trying to figure out how to get oil prices up. That's because the consumer's doing really well on energy prices, and that's really a good thing for their ability to spend. The other thing we know is they're all working. I mean, we're talking about record low unemployment, and we're talking about rising wages among people who are non-supervisory at probably the 3.5% level. So it's really a strong environment. Oh, and there's no problems with credit. No matter what you heard, yes, there's been a few bank tweaks on tightening, nothing that would be really affecting the consumer. It is great out there in all aspects.
All right, so you spoke a little bit about the falling oil prices helping out the lower end of the consumer spectrum, the budget spenders out there. Let's talk a little bit more about that side of things, because we are starting to see a little bit more of a percolation up there in spending on that end because some consumers are saving on their gas bills. What needs to happen for those budget end spenders to continue to spend, and does that make those dollar store type investments or the Walmarts out there better investments going into 2020?
It absolutely does if we have stability in energy prices. That's one of the two things really affect the average consumer. Energy prices and job availability, coupled with rising wages, of course. But the whole wage picture and the stability of that, and then stability of the cost side, and for most people, that means energy. So as long as that's solid, the consumer is going to be healthy. We have to have some sort of exogenous shock to stop this consumer, because this consumer believes everything's fine. I have a job. I'm going to keep my job. I'm making more money. I don't see any inflation. Costs aren't going up for me on most things, certainly not in energy, but also not in consumer goods, despite the tariffs. And so they're looking at it going, hey, I can buy, and my credit's okay. I'm not over-levered. So it's all working for that consumer.